Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 7, 2023. Stocks slip as investors await U.S. jobs data. Global stock markets experienced a decline as investors braced for the release of U.S. jobs numbers, which would provide insights into the Federal Reserve's potential interest rate hikes. European stocks were on track to record their worst week since March, while Asian stocks slid for the third consecutive day. The decline in stock markets followed stronger than expected private hiring data in the U.S. Additionally, corporate news impacted market performance, with shares of Just Eat Takeaway.com NV and Persimmon plc experiencing slumps after bearish reports from Exane, JP Morgan Chase & Company, and Halifax. On the other hand, Alibaba Group Holding Limited saw a rise in U.S. pre-market trading due to gains in Hong Kong following reports of the conclusion of a probe on Ant Group company by Chinese authorities. Investor sentiment and rate hike expectations. Traders increased their expectations for more rate hikes as ADP Research Institute data revealed that U.S. companies added the most jobs in over a year in June. The upcoming U.S. non-farm payrolls and unemployment reports were anticipated to be key factors in determining any revisions in rate hike expectations. The current data prompted a spike in Treasury yields. However, some analysts believe that if the upcoming reports align with market expectations, yields may experience a pullback over the weekend but still remain on an upward trajectory in the following week. Implications for the market. The recent decline in stock markets in July comes after a strong first half of the year. The hawkish stance of central banks, including the Federal Reserve and the Bank of England, has dampened hopes of a smooth global economic recovery. Technology shares, driven by the excitement surrounding artificial intelligence, have been particularly impacted, and Bank of America Corporation strategists warned that investors who heavily invested in the sector may be caught off guard by the sell-off triggered by rate hikes. Nonetheless, some analysts suggest that the second half of the year may witness a continuation of the push higher in yields, particularly if excitement over AI persists. Global monetary policy and inflation concerns. Swap contracts linked to the Federal Reserve's future policy decisions indicate an increasing likelihood of interest rate hikes. This expectation for higher rates reflects the global trend of tighter monetary policy as central banks aim to control inflation. Policymakers, including Dallas Fed President Lori Logan and European Central Bank President Christine Lagarde, have voiced concerns about persistently high inflation and emphasized the need for further tightening measures. Additionally, U.S. Treasury Secretary Janet Yellen held informal talks with Chinese officials, aiming to stabilize the relationship between the two superpowers. Outlook for U.S. labor market. The strong ADP jobs report, indicating robust private sector hiring, has raised expectations for the Labor Department's non-farm payrolls report for June. Economists anticipate a rise in payrolls by 240,000 and an unemployment rate of 3.6%. However, the U.S. jobs market is known for its unpredictable nature, and previous expectations have been proven wrong. The upcoming report will provide a clearer view of the state of the labor market and its impact on investor sentiment. Innovations in financial markets, biodiversity credits. The concept of biodiversity credits is gaining traction as an emerging market similar to carbon credits. These credits assign a monetary value to projects aimed at protecting and conserving biodiversity. The credits can be purchased by entities or companies seeking to offset or reduce their environmental impact. The UK is leading the way in this new market, with plans to launch a prototype in November 2023. The government has introduced the Biodiversity Net Gain, which mandates that new development projects compensate for their impact on biodiversity and increase the value of the site's biodiversity. The market for biodiversity credits holds potential for supporting smaller climate change mitigation projects and protecting threatened ecosystems. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, Let's get back to the financial market news and the latest updates. As investors await the U.S. jobs data, stock markets experienced a decline, reflecting concerns about potential interest rate hikes. European and Asian markets were particularly affected, while corporate news impacted specific stocks. The anticipation of higher rates is reinforced by swap contracts linked to future Federal Reserve policy decisions. Inflation concerns continue to drive global monetary policy, and efforts to stabilize relations between major economies are underway. The upcoming U.S. non-farm payrolls report will provide further insights into the labor market and its implications for market sentiment. Additionally, the emerging market of biodiversity credits presents opportunities for environmental mitigation and conservation projects. Some of the main moves in markets today. Stocks. The Stoxx Europe 600 fell 0.3% as of 9:40 a.m. London time. S&P 500 futures fell 0.2%. Nasdaq 100 futures fell 0.2%. Futures on the Dow Jones Industrial Average fell 0.2%. The MSCI Asia Pacific Index fell 0.7%. The MSCI Emerging Markets Index fell 0.7%. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro fell 0.1% to $1.0878. The Japanese yen rose 0.7% to 143.06 per dollar. The offshore yuan rose 0.2% to 7.2432 per dollar. The British pound was little changed at $1.2743. Cryptocurrencies. Bitcoin fell 0.8% to $30,087.04. Ether fell 1.3% to $1,859.43. Bonds. The yield on 10-year treasuries was little changed at 4.04%. Germany's 10-year yield was little changed at 2.63%. Britain's 10-year yield was little changed at 4.66%. Commodities. Brent crude rose 0.4% to $76.80 a barrel. Spot gold rose 0.2% to $1,914.04 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.